Welcome back to Dinar Community Channel. They called it a pipe dream. They mocked the believers. But today, undeniable proof has emerged. What was once dismissed as speculation is now shaking the global financial stage. The IQD reset isn't coming, it's already happening. For years, the Iraqi Dinar (IQD) has carried the weight of being labeled merely a speculative investment. Investors around the world, from seasoned currency traders to everyday individuals, have debated its legitimacy, with mainstream economists often dismissing the currency as nothing more than a high-risk bet on a country struggling to regain economic stability. Yet in 2025, a string of undeniable developments has emerged that provides concrete proof that the IQD is no longer just speculation, it is transitioning into a legitimate global currency backed by strategy, reform, and economic reawakening. The perception of the dinar as a mere speculative asset began after the 2003 invasion of Iraq. With the country's currency severely devalued and the economy in ruins, the dinar fell to astonishingly low rates against the US dollar. Many saw this as an opportunity, buy low and hope for a future revaluation. What followed was a slow-growing community of investors and online forums fixated on the idea of a revalue, often referencing historical examples such as the German mark or Kuwaiti dinar. Yet for years, despite minor reforms and oil wealth potential, the IQD never made the leap to a globally traded currency at a significant exchange rate. But now, in 2025, the narrative has shifted from hope and rumor to official data, strategic policies, and actual institutional movement. What was once considered wishful thinking is becoming increasingly tangible. Proof of the IQD's legitimacy starts with the economic foundations being laid within Iraq itself. The country has made tremendous strides in stabilizing its financial and political systems. Under the leadership of Prime Minister Mohammed Shia al-Sudani, the government has implemented sweeping anti-corruption reforms, modernized its banking sector, and digitized many of its financial systems. For the first time in decades, Iraq is beginning to mirror the characteristics of an emerging market economy that can support a globally recognized currency. One of the most significant turning points was the full integration of the Iraqi banking system into international frameworks. The Central Bank of Iraq (CBI) has recently confirmed compliance with the Basel III banking standards, bringing the nation's financial institutions into alignment with global transparency and risk management regulations. The adoption of international SWIFT codes by major Iraqi banks, and the deployment of digital platforms for real-time payments and settlements, underscore Iraq's intention to modernize and open its economy to global investors. Moreover, Iraq's massive oil reserves, long regarded as its economic backbone, are now being more strategically leveraged. For years, the country's oil wealth was not fully translated into currency strength due to mismanagement, smuggling, and a lack of accountability. Today, Iraq's oil contracts are being restructured under more transparent, government-controlled frameworks. Oil revenues are now being directed into sovereign wealth programs, national infrastructure projects, and currency stabilization reserves, providing real backing for the value of the dinar. Additionally, international recognition of the dinar is now visibly unfolding. Several key financial institutions, including global banks like JPMorgan Chase and HSBC, have begun quietly incorporating the IQD into their Forex tracking platforms and internal systems. While not all have opened public exchange programs, behind-the-scenes preparations are evident. Analysts have reported that some Tier 1 and Tier 2 banks in North America and Europe have been testing IQD exchange protocols and calibrating their systems for future integration. In tandem, regional banks across the Middle East, especially in the UAE, Saudi Arabia, and Qatar, have begun active currency swaps and bilateral trade deals involving the IQD, elevating its real-time demand and circulation. The final blow to the speculation-only narrative came when Iraq officially announced a managed float system for the IQD, pegging it within a tightly controlled basket of foreign currencies that includes the US dollar, euro, and Chinese yuan. This policy move signals an intentional shift from a fixed peg to a flexible but managed exchange rate system, one that allows for upward movement of the dinar based on market demand while avoiding instability. Currency analysts agree. Such a framework is only adopted by countries that are confident in their macroeconomic fundamentals. Another compelling development is Iraq's direct partnership with the International Monetary Fund (IMF). In early 2025, the IMF confirmed a multi-phase financial assistance and monitoring program designed to support Iraq's efforts to increase exchange rate transparency and institutional capacity. More importantly, this program includes measures specifically focused on currency reform. These measures would not be included unless there was a long-term trajectory in place for the dinar to transition into a globally respected currency. While the general public may still be unaware, private exchange programs involving the IQD have already begun in limited, high-net-worth circles. Reports from credible insiders point to organized, appointment-only IQD redemption programs operated through private banking divisions of institutions like Wells Fargo, UBS, and Citibank. These exchanges are taking place under non-disclosure agreements, but the patterns are consistent. Wealthy clients are being allowed to exchange IQD at contract rates significantly higher than the CBI's published rate. These early redemptions are not mere rumors, they are part of a structured rollout strategy designed to gradually absorb dinar into the global financial ecosystem without causing market shock. Even more revealing is the re-entry of Iraq into major regional economic blocs. In 2024, Iraq finalized its full reintegration into the Gulf Cooperation Council (GCC) financial systems. As part of this agreement, GCC member nations are now permitted to conduct limited transactions in Iraqi dinars, and several have committed to increasing their dinar holdings as part of their foreign currency reserves. Saudi Arabia, in particular, has initiated a bilateral currency swap agreement with Iraq valued at several billion USD equivalent. These state-level agreements represent a significant milestone in the IQD's journey toward becoming a legitimate currency of trade. Parallel to this, Iraq's sovereign credit rating has been upgraded by agencies like Fitch and Moody's, which had long held the country in speculative territory. While still rated below top-tier nations, the consistent upward movement in credit ratings shows that the financial world is taking Iraq's reforms seriously. These upgrades make it easier for Iraq to borrow on the international market and attract foreign direct investment, further strengthening its currency. The transformation of the IQD is not solely based on what Iraq is doing domestically, it is also driven by geopolitical interests. The US, China, and Russia all have major economic interests in the region, and Iraq is strategically positioned to benefit from global power shifts. The US maintains strong diplomatic ties with Iraq and has vested interest in seeing the country stabilize financially. China has entered into major infrastructure and oil trade deals with Baghdad under its Belt and Road Initiative. Meanwhile, Russia has used energy diplomacy to extend its influence. These competing interests create a protective buffer around Iraq, ensuring that no single power dominates while also encouraging mutual investment and stability. Another layer of proof comes from the rapidly growing ecosystem around the IQD, financial apps, tracking platforms, and blockchain verification tools designed to support currency authentication and exchange logistics. Fintech companies in Dubai, Singapore, and even New York have begun quietly supporting backend tools specifically for the IQD. The existence of this infrastructure reveals planning and preparation far beyond what a mere speculative currency would receive. Further still, Iraq's stock exchange ISX is receiving unprecedented attention. Once limited in scope and liquidity, the ISX is now being targeted by global investment funds that see opportunity in Iraq's post-war economic resurgence. A modernized IQD is key to enabling capital flow and asset valuation on the exchange. The ISX is also expanding partnerships with global trading platforms to allow foreign investors to buy shares denominated in dinars. The legal framework supporting these economic and financial transitions is also evolving. In 2025, Iraq passed a landmark economic reform bill that grants the central bank greater autonomy while empowering it to manage foreign reserves, control inflation, and regulate cross-border currency movement. Legal modernization is critical in preparing any currency for global legitimacy, and Iraq has recognized this by aligning its commercial codes with international standards. This reduces the perception of legal risk for foreign investors and currency traders, directly supporting greater demand for the dinar. A core argument from skeptics has always been, if the IQD is legitimate, why hasn't the exchange rate changed yet? But this argument ignores how international currency reforms typically unfold. Currency revaluations, particularly of this scale, are rarely executed overnight. They are the result of multi-year, carefully sequenced economic planning. The proof is in the alignment of infrastructure, policy, and global banking participation, all of which Iraq has been steadily implementing. What's different now is the visibility and pace of these developments. To be clear, the IQD is not guaranteed to perform at any specific rate or timeline. No currency is. But the case for the dinar has clearly graduated from wishful thinking to strategic execution. For those who have followed the journey, it is no longer about if the dinar will be revalued or integrated, it's about how far along the process already is. And judging by the banking systems in place, the global partnerships being formed, and the increasing institutional exposure, the answer is quite far. Perhaps the final and most compelling proof is psychological, the shift in how the world now views Iraq. No longer seen merely as a post-conflict nation struggling to find its footing, Iraq is increasingly being positioned as a regional economic leader, a key energy player, and a financial hub in the making. That kind of reputation takes decades to build, but Iraq is accelerating its progress at a remarkable pace. And at the center of that story is its currency, the IQD. The dinar was once a gamble. Today, it's a strategy. The rumors and speculation may have launched the movement, but the facts, systems, and global confirmations are now writing a new chapter, one built on evidence, reform, and geopolitical positioning. The IQD is no longer just a speculative investment. It is becoming what its believers always hoped it would be, a legitimate, globally recognized currency with real value and real future. Like and subscribe for more videos.